The Federal Reserve has the power to manipulate the stock market, but also it could crash the American economy. This can be achieved through soft force, mainly through Jerome Powell, the Fed chair, speaking, or it can be more of a blunt force tool, a strong force, which is lowering or raising interest rates. In the next month, we have one example of each of those forces coming up. They're going to be absolutely critical for investors, but just also for the American economy. First up, we have the Jackson Hole Symposium located in Wyoming, America. It's actually happening probably as you watch this right now from the 21st of August to the 23rd. This is where all the important central bankers from all over the world meet in one place in order to discuss policy. But the most important event that we care about is actually happening on Friday at 10 a.m. American Eastern Time, and that's where Jerome Powell will be giving his keynote speech called the Economic Outlook and Framework Review. That might sound really boring and dry. However, it's the implications from those speeches that could be really interesting and potentially make or lose people a lot of money. For example, let's look back at 2022, where Jerome Powell used the exact same Jackson Hole stage to deliver a speech that really shook the markets to their core. During this speech, Jerome Powell said he wants to keep interest rates higher for longer. He believes inflation would take a long time to come down, which is actually true. It's still quite high 3 years later. And he was willing to cause economic pain in order to get inflation under control. And the result of that speech were tech companies getting absolutely crushed in the stock market. The NASDAQ, which is an index full of growth in tech companies, was already down 21% from the all-time highs back in November of 2021. It then fell another 20% just after Powell's Jackson Hole speech. It went into a downward bearish trend for around 2 months. That's the power of soft force. It only takes a few words from really powerful individuals to move trillions of dollars. However, in 2025, personally, I'm leaning towards Jerome Powell using his soft force to actually say that, hey, maybe interest rates are going to go down, and that's going to make the stock market really excited. And that brings me to the second key event happening in just under a month, and that is the next Fed meeting, where they meet to talk about interest rates and what I believe is going to be some interest rate cuts. Markets are already betting big that there's going to be an 86% chance of a quarter point cut in this next meeting, and then a 50% chance of another quarter cut in October. That would put an end to a 9-month pause in the dropping of interest rates. These two events together create a powerful combo. Jerome Powell has a great opportunity at Jackson Hole to direct the American economy and the American stock market in more of a growth direction, or he could point America towards more stability and cooling down the economy. We are going to have a bit of fun here now and play a bit of a game of, well, what is Jerome Powell going to say in his Friday keynote speech if he wants to signal, look, I'm willing to crush the economy to keep inflation under control, or is going to come in and save the stock market, signal for interest rate cuts, and stocks are going to be up 10% over the next month. Option one is hawkish Jerome Powell. That means he's willing to sacrifice the economy to get inflation under control. In this option, Jerome Powell is actually confident about the US jobs market. We can handle these 4.5% minimum interest rates in the economy. However, inflation is a big problem, mainly caused at the moment by tariffs and other sticky places like housing and healthcare and insurance costs. We have seen a steady increase in inflation in recent history, and Powell could just want to get that under control and crush that back below 2%. In order to achieve that, Jerome Powell would have to make clear in his keynote address at Jackson Hole that he's not actually ready just yet to lower interest rates. Now, that's going to be a huge surprise to the market, and the market really does not like a surprise, and the S&P 500 could decline around 10% in a week. It doesn't need to take very long, and because the stock market also has an extremely high valuation, then whatever decline we were going to see is going to be much larger than usual. Only going back back to April of this year, we had that tariff shock, which yes, is bad for corporate profits, but you had heaps of companies that were not even attached to importing goods and paying that tariff. Many companies were down 20, 30%. Names like big tech and Google, when they just never should have sold off. But the market gets emotional, especially when it comes to a surprise, and we could see that type of sell-off once again. Explaining the second option now, that's dovish Jerome Powell. That's where he's more concerned about the jobs market. Unemployment is staying quite high, and there's just not that many jobs being created. Now, in this scenario, inflation is decently under control. Yes, it's just under 3%, but in Jerome Powell's eyes, he thinks, look, tariffs are actually a short-term issue. Maybe countries are going to make deals with America and the average tariff rate is going to head lower and lower, and individual businesses are going to figure out methods and strategies in order to minimize tariffs. Therefore, the total cost to the American consumer isn't actually going to be that much. Jerome Powell will make that clear in his Jackson Hole speech, and he's also going to commit to cutting interest rates really in the next 3 or 4 meetings. The main stimulus that's going to have on the American economy is really in the stock market, because prices can move instantly. However, seeing those interest rates get implemented in the real economy, more loans being made, more spending and investment from private and public companies, that takes 6 to 18 months. If you hold stocks in the market, you're going to have a glorious time. Even things like Bitcoin and Ethereum, cryptocurrencies, they're going to go through the roof as well. Which path is he going to take? Is he going to be hawkish or dovish? Is he going to cause some pain to the stock market and our portfolios? Comment down below. Thanks for your time for watching. If you watched all the way to the end, you probably love these videos. Make sure you subscribe if you haven't. See you guys next time. Bye.